If you've been paying attention to the stock market, you may have noticed global stock markets have dropped significantly. This has followed the speculation and announcement of widespread tariffs, igniting fears of a possible global trade war. Will it happen? What's going to happen to your investments, your retirements? Joining us right here live on The Splash is CPA and financial advisor from Bloom Advisors, Mr. Rick Bloom. Thank you for being here, sir.
Thanks for having me, Kevin. It's great to be here.
We appreciate it. I just want to get straight into it, just a general response. How do you recommend some of the residents in Greater West Bloomfield respond to how volatile the recent stock market has been, specifically those with retirement nearby?
As difficult as this may sound, I generally recommend people don't do anything. I think it's a mistake to operate under fear or greed. When investors make decisions based upon fear or greed, they're going to make the wrong decisions. So I think that it pays for investors to take a step back and let this play through. We have a lot of volatility in the market. It's moving all over the place. Yeah. And I think it's best for people to take a step back. And what I always believe investors need to do, Kevin, is invest not based upon where the market is today, but where their goals and objectives are. You know, that's the most important thing for an investor, because if someone is 20 years away from retirement, you know, this is a great buying opportunity. And so I think you need to look at your individual situations. I would tell investors, don't overreact. Don't really do anything, except maybe don't watch the news and turn off the market for a few days.
Yeah, I understand. Yeah, I like to say, just keep it in there and just let the market do what it does. Historically, it always climbs, so just make sure you're in it for the long haul. But you're the professional. I don't want to speak on that. But
but you said it right. Yeah. You said it exactly right, Kevin. And think about this. 100% of the time that the markets have had a downturn, they've always come back. And they come back over shorter periods of time than people think. I'll go back 5 years ago when we were in the midst of COVID. You know, 5 years ago now, people were selling out because the market was down 25, 30%.
Yep.
By the end of the year, markets already were in positive territories. Things turn around fast. And I think for investors to try to time the market, it's impossible. It really is. And people shouldn't even try.
I would agree with that, but I'm so glad you said it as the professional yourself. I appreciate the the acknowledgement too. So, you know what I want to talk about? There's been talks of a possible recession. Are we in a recession? Are we going to hit a recession? What steps can individuals and small business owners here in West Bloomfield take to protect their financial future during a potential recession?
I think that what protects investors is when they invest based upon their goals and objectives. Because it's not that we won't go into a recession. The real question is, how long will the recession last? We sometimes go into a recession and we're out of it before you know it. Again, COVID proved that. We were in a recession for a couple weeks, then we came out of it. So I think it's hard to predict if we're going to go into recession. The definitions change. So I think the average investor shouldn't worry about that, because what if the recession only lasts a few weeks? Not a big deal.
Good point.
I think that's what the focus should be, and it's hard when you see your accounts go down, but you have to focus on your long-term goals and objectives. And it's at times like this where investors make mistakes that really cost them for years and years. Because all too often what investors do, Kevin, they'll sell when the market's low, and then they'll wait till the market rebounds, and then they'll buy. So they're ending up buying high and selling low. And I can guarantee you that's not a prescription to make money.
Yeah. It's just an emotional reaction for the most part. For most of the spectator investors, it's just an emotional reaction.
You're so right. And I would tell any small business owner, look at your business. Would you value your business on a day-to-day basis? You would go crazy if you look at what the value is every day. And that's what people do on the stock market.
No, I agree. I agree 100%. With us right here, live on The Splash, by the way, CPA and financial advisor for Bloom Advisors, Mr. Rick Bloom. Just talking about the stock market and how we can better protect our investments, our retirements, and how we should react to it. With that being said, Mr. Bloom, I know education is extremely important when it comes to this, right? I want you to speak on it. How can local financial education, or community programs better prepare residents for potential economic downturns?
Well, Kevin, we live in the greatest, richest country in the history of the world, and they never teach us about money. As a society, we do a very poor job of teaching people about money. If it was up to me, we would start when kids are in kindergarten start teaching them about personal finance. I think it's something that everyone has to do. You have to educate yourself. You have to start taking courses. The more you know, the better you'll be with your money. The problem is, people never do any work on it, and they learn it from their friends who have no clue either. And they start getting into this, craziness where they're like the hamster in the wheel. They're running real fast, but at the end of the day, they're going nowhere. Yeah. So I would encourage all civic groups to really make an effort to teach people about personal finance. And it's just not one time and you're done. It's something that you constantly have to refresh yourself because the rules are changing. But I'm telling you, the more you know about finances, the better your finances will be. Yeah, and one thing I would tell everyone to start off with, if nothing more, to do a family balance sheet. Know where you're starting from. Know what your assets are. Know what your liabilities are. And also do a cash flow statement so you know what it costs you to live a month. Most people have no idea. They guess. You should know what it costs you to live a month, where your money's going month to month. Because if you know where your money's going, you better can control it.
Man, you said that. And once again, this is some of the things that seems like it's common sense or obvious, but it's often just overlooked. It's just often, and you gave a lot of great gems right there. And I know you're a professional. You want to get compensated for your knowledge, which you should. But just so while we have you here, any other often overlooked financial planning opportunities you think more Greater West Bloomfield residents should consider right now in our situation?
I do. I think that with the market low, Kevin, a great opportunity is for people to look at converting existing IRAs into a Roth IRA.
Okay.
What happens is, with the market down, you can convert money and pay less taxes. And the benefit of using a Roth IRA versus the traditional IRA is that in the traditional IRA, you eventually pay the tax. In the Roth IRA, that money grows tax-free for as long as you want. So people that have traditional IRAs, this creates a great opportunity to say, I could convert money, move money in a lower value into a Roth IRA, then when the markets recover, all that gain is going to be tax-free. And the other benefit of a Roth IRA is that it's not subject to minimum required distribution. So at age 73, you don't have to touch the money. You can let it grow tax-free for as long as you want. And again, even if you pass on before you take all the money and your kids or something inherit it, they don't have to pay income tax on that money as well. So I think converting money into a Roth IRA in a down market makes a lot of sense for people.
All right.
And again, I also think this is a great opportunity for people to relook at their portfolios and to see if it really reflects their goals and objectives. I find when I sit down with people, so many people just don't have a game plan when it comes to investing. They invest in what's hot. And that's a mistake. You need to be diversified. You need to spread out risk into a variety of different areas.
Different areas, different industries as well. Completely understand that, sir. And we appreciate it. I could ask you so many more questions, but this is why you're professional and this is why you get paid. So just to put it out there, if anyone is curious to find out more information, want to reach out to you, how can they do so, sir?
They can do it at bloomadvisors.com. Email me if you have questions, but that's our website, bloomadvisors.com.
Oh, man. Thank you again. Thank you so much for your information. Extremely valuable. I hope everybody was taking notes like I was. Once again, financial advisor, CPA from Bloom Advisors, Mr. Rick Bloom. We appreciate your time.
Thanks so much. It's an honor to be here.